Hello, this is part two. I decided midway there's going to be two parts. In this, we're going to cover the company's balance sheet plus revenue segmentation or more numbers defined ways of how much revenue is derived from what segment. So, first, let's go at the balance sheet. Amount in crores as of September 30th, 2025. This is the latest one. We'll focus on this. So, interestingly, we first go to total non-current assets and total current assets. Non-current assets are assets which cannot be sold and converted into cash within 12 months, while current assets which can be sold and converted into cash within 12 months. So cannot be sold but can be converted into cash. So can be converted into cash within 12 months, cannot be converted. Simple definition, 2,128 crores. Then total current assets, 1,248 crores. Total borrowings, long-term borrowings of 1,075.36 crores with short-term borrowings of 464.13. Long-term borrowings should come in total non-current liabilities, while short-term borrowings should be included in total current liabilities. They have equity, which includes reserves like retained earnings and all of that, of 1,315.77 crores. Now, let's move forward. Okay, let's move forward. Ratio analysis. Ratio analysis. The company has a current ratio where current assets are divided by current liabilities 1.91. This could be a good thing or a bad thing, not really sure. Debt to equity of 0.77 is actually pretty high. A debt servicing coverage ratio, basically EBITDA divided by interest payments plus principal of loan payments as a denominator is only 1.05. So a bit risky, actually pretty poor. This is actually pretty poor, meaning like EBITDA upon interest payments plus principal payments is only 1.05 times. That's not really that good. However, the ISCR, the interest service coverage ratio, meaning EBITDA divided by the interest payments only, not the principal payments of the loan, but only the interest, is 2.24, which is actually pretty healthy. All right. So, okay, this is good. Debt to equity 0.77 depends on the industry. This is pretty poor. It generally is pretty poor. Then, for the sustainable aviation fuel, one more point of information. The 80,000 tons per annum ethanol to jet sustainable aviation fuel SAF project positions TruAlt in a premium margin globally undersupplied market with strong policy driven demand growth. So 80,000 tons per annum is the project. That is the size of the project, the ethanol to jet fuel sustainable aviation fuel market. Okay, it's a high margin and it's undersupplied. So that is a good thing. Now, finally, revenue segmentation. Okay, where are we making the money from? So remember that in fiscal year 2025, the company had revenues of 1,900 something crores. So keep that in mind. Now you will see how much money is being produced from wherever. So first we have the ethanol segment. Okay, ethanol segment. Ethanol segment, let me just go a bit closer. Sold in fiscal year 2025 1,940.71 kiloliters worth of ethanol. All right, that's a good thing. It produced revenues of 1,433.94 crores in fiscal year 2025. So out of 1,900 something ish crores, 1,435.33.94 came from ethanol selling only. Around four, sorry, okay. Then the ENA segment, the extra neutral alcohol. Basically, ethanol, a purified version of that is extra neutral alcohol, and this is like the ingredient. Okay, it's an ingredient for all alcoholic beverages. So, in order to produce alcoholic beverages, extra neutral alcohol is a key ingredient and it's related to their core ethanol business. So they sold 43,795 kiloliters of extra neutral alcohol in fiscal year 2025. It's given there fiscal year. The other things are quarters. We will focus on the year as of now. and revenues of 283.67 crores. So more than 10% of fiscal year 2025's revenues came from this segment alone. So ethanol is ENA as the core ethanol. Then the compressed biogas. Okay, it's not clear. The compressed biogas segment. How much did that produce? Hold up. Is this is this correct? Let me just see. I think this is correct. Yeah. So it seems that Leaffinity is the subsidiary which does the CBG one. So basically their own subsidiary. Okay. So the CBG segment produced revenues of 276 crores in fiscal year 2024-25. So again, more than 10% of revenues is coming from CBG. What was the EBITDA? What was the EBITDA? EBITDA came out to be, okay, this is in lakhs. This is in lakhs. So 1,151.43 lakhs, 115 crores of EBITDA. Very high EBITDA margin. CBG is the high EBITDA margin, 41 point something percent. If I remember, we're talking about a 16% operating profit margin for the entirety of TruAlt for 16% operating profit margin or EBITDA margin. It seems that CBG only contributing 10% plus of revenues, not the highest amount, is the high margin segment. This number 41% is the EBITDA margin. This is the high EBITDA margin business. Okay. And finally, we're gonna go back actually. We're gonna go back. Only one statement to show. One statement to show. Where is it? Yes. They have 16 plus proposed total new CBG units, and they have 250 biofuel stations targeted nationwide over the next 5 years. That is it. That is TruAlt Bioenergy Limited. It's going to be interesting seeing if the sustainable aviation fuel market becomes a massive opportunity for them.